All right, welcome back. The market is down 135 points. So things are looking weakish. NSE advanced decline is still in favor of declines. 1,050 stocks are lower, about 800 stocks are higher at this point. So there's no recovery. I think became even, but the gap has become wider again. Now, PI Industries is the company we're going to be talking about. The stock was up 10% yesterday. Strong second quarter performance aided by both the domestic and export markets. The revenue is up over 30%. Margins have expanded to 24% compared to 22% last year. The company in its conference call has also said that they hold FY23 guidance of 20% revenue growth and 100 basis point margin expansion. Mayank Singhal is Vice Chairman and Managing Director at PI Industries. He's joining us right now to take some questions. Mayank, great to have you with us here on the program. Thank you very much. After the performance, what analysts are asking is, why are you still sticking with that 20% growth guidance and why not revise it? Both actually sort of revenue guidance and margin guidance as well. Will you be able to do more? And if you can tell us what's the thinking behind keeping and staying with the earlier guidance?
Yeah, morning, Prashant. So thank you for having us on. Just to give you the outlook for the second half of the year, the first half has been a good performance. As we see that our original guidance was between 18 to 20%. We have actually put a correction to say it will be 20+%. We clearly see the opportunities for growth in the long term, but keeping the outlook on the volatility in the global markets, we would still like to keep a conservative outlook on this, and the company is confident of delivering the guidance given in the past. Yeah.
So, Mayank, you're not alone. I mean, most companies across sectors have scaled down their estimates for earnings because of the exposure they have globally. Can you tell us which are the pockets that are getting hit the hardest, and where do you see some perhaps minor signs of recovery come through as well?
Well, to be honest, I would not say that I see any challenges, but we are not doing it on that grounds. But what we are seeing, that the volatility in the agricultural scenario is pretty large, looking at the climate impacts that we are seeing in the various parts of the world. And, this is a business which is very much dependent on that. But for the given moment, we don't see much of those challenges hitting our business. Actually, we see good opportunities which are coming our way. So to be very positive, I would be saying that for now, that we are confident that this would happen.
So when you say good opportunities, right, are you talking about this Europe +1 opportunity? And will that in any way bring in more business for you?
Well, our business, as you see, is a long-term based approach. So it's not a Europe +1 that is a commodity cycle that Europe today has a shortage, so that will get plugged over the next 6, 8, 1 year. But I see this more as an opportunity of the demand of the crop and the shifting of the demands which are coming up in the global scenario between China and the temporary shortages that may be coming out of Europe.
All right. Mayank, on the top line, it appears that 20% is pretty much very easily going to be achieved, and you'll do better than that. What about on the margin parameter? What should we work with?
As we indicated, obviously with that growth, we'll get the operating leverage. So we've indicated 100+ bit points that we are looking to expand the margins with.
From what you reported in the past quarter?
No, we were at the annualized basis for last year.
Okay.
Okay. I guess this is also a time when it is perhaps easier to get acquisitions at a attractive valuation because of all the challenges that global companies are facing. Are you scouting for any acquisitions at the moment? Anything that you'd perhaps finalize within the next 12 months?
Yes, as we said, that we're very aggressively looking at the acquisition front in our pharma initiative. We are pretty confident that over the next 12 months, we'll definitely be closing down on a couple of them to come to the right outcome as desired to our strategy.
Mayank, you all had raised money a couple of years ago, and you all have been saying you all are scouting out, but nothing seems to be coming up. Let me ask you point blank, are you looking at granules? Because some reports indicated that. Is there any truth to that? Maybe there's a gap on valuations, but have you all spoken at all?
Well, you've seen the clarification in the stock exchange, and that's what I would keep it. So we are looking at a differentiated approach, not specifically that one.
So no truth with regard to granules, right?
Yes, you've seen that disclosure given already onto the stock exchange.
All right. Okay, fair enough. But you said next couple of quarters, we should see something, right? Next few quarters.
Yes, for sure.
All right. The order book, how should we read this order book? I mean, it was from $1.4 billion at the end of the first quarter, it's at about $1.8 billion.
That's right.
What's the accretion going to be? And, this is executable over what time period? Could you give us some sense?
Yes, the order book execution period remains the same as indicated before, between 3 to 4 years. This is the expansion of the order book position, given that the scale and size of the business is growing. And then on the other hand, we are actually building more capability and capacities to surface the needs of our customers.
What is the pace of the increase in order book? I mean, is it very lumpy? Is it, or one can kind of project this also?
No, it's a steady state. As you know, the custom manufacturing business is not a short-term up and down. It's a long-term based business. So these contracts are typically spread between 3 to 4 year periods.
Okay, all right. Mayank, that one product of yours, pardon my pronunciation, but pyroxasulfone, I think that's the one that's contributing bulk of the growth and bulk of your revenues as well. My question to you is, are you all the sole, sole producer, sole supplier of this one? Or are you gaining market share in this particular product?
Well, I would not say both, and that would be sensitive to inform because of the confidentiality understanding with our partners. Clearly, as you see, the new products that are coming in the pipe, they're always new patented products have scope of growth, and we are partnering to growth, and it's a situation that varies from a quarter to quarter based on the supply and market demands.
Okay, just coming back to the acquisition, right? You said over the next 12 months, you're looking at something in the pharmaceutical business, but ruling out on granules. You have said in the past that you're looking for a differentiated scale play within the pharma space itself. What is the kind of opportunity that you see there? What kind of growth are you looking at?
Well, as we mentioned, it will be of a substantial size. And as you know, the company has a substantial fund, so you can actually correlate that to see what kind of investments that we'll be making in terms of the kind of revenue lines and the returns that we'll be looking at that. That should be value credited to PI.
Okay, all right. And overall, can you give us a sense of what the growth triggers could be for the business? I mean, over the next, say, couple of years, what are you looking at in terms of compounded growth, and where does the big, value unlocking come from?
Very clearly, as we have indicated in the past, we will continue to grow at a minimum 20% CAGR for the next couple of years in the CSM business present. Added to that would be the pharma capabilities the company would be adding, and the growth coming driven from the new avenues that we're taking up there.
Mayank, you're talking about some diversification. I think you launched 9 molecules in the last year. This year, I think it'll be another 7. These new molecules, how much will they contribute?
Well, I don't have the exact numbers, but as you know very well, that some of the new molecules in the early stage of startup, they don't have a large percentage of contribution there, but over the period of time, these are new launches which happen across the globe at different geographies. They ramp up and scale in the life cycle of a typical product for achieving top numbers would be about 15 to 20 years.
Okay, all right, Mayank, we'll leave it at that. Thanks a lot for joining in and speaking to us. That's PI Industries aggressively looking at an acquisition in the pharma space, and within the next 12 months is when they plan to close it. By the way, the market is selling off now, so don't lose sight of that. The Nifty is just hanging on to 18,000 by the skin of its teeth, down about 140 points. There's pressure, of course, in names like Tata Motors, but some new stocks are topping the list on the losers chart. So there's M&M that's down about 3% ahead of its numbers tomorrow. There's Titan that's down about 3% odd. Axis Bank, of course, Tech Mahindra, Eicher Motors, SBI Life. The list is getting longer in terms of losers. But on the gaining side, Westlife Development posted a stellar set of Q2 numbers, the highest ever quarterly sales and EBITDA. Of course, post-COVID, consumption has come back in a big way. So you're seeing it in the numbers. Revenue is up 44% versus the pre-COVID base, and there's a 40% same-store sales growth as well this quarter. Amit Jatia, who's the Vice Chairman at Westlife Development, joins us now to talk about that. Amit, good morning and thanks a lot for joining in. I'll come to the core numbers in a bit, but just in general, if you can tell us, how has the situation evolved now? We are well past, the COVID phase. Compared to pre-COVID levels, the growth has come back in a big way. But what do you see as the big trends over the next 1 to 2 years?
Well, we are quite bullish about where we are heading, especially in the informal eating out space. Particularly when I talk about Westlife and brand McDonald's, we feel that rather than being tactical, we've laid a very strong strategic foundation through the omni-channel strategy, and particularly focusing on meals through our menu. And actually that is continuing to give us results while I hear there is weakness in the market in sort of FMCG particularly, I feel that at least our business continues to grow quite strongly. So we feel that the shifts that have happened through COVID, where in-store eating has come back, but that has not impacted the off-premise business at all. In fact, in the last quarter, off-premise business grew by 12 to 13%, while in-store came back by almost 95%. That clearly reflects that it is foundational shift, and we continue to see this trend in the coming months.
Okay, all right. Hi, Mr. Jatia. In the first half of the year, you've done close to around 1,100 crores. Earlier, you were guiding for around 1,800 to around 2,000 crores odd. So my guess is that given the kind of appetite that everyone has and going by your commentary, you should easily surpass that, right? What should be the year-end target in terms of revenues and steady-state margins we look at from here on?
Sure. I mean, we surely think we will cross 2,000 crores. So we are quite confident about that. In terms of margins, we had said, mid to sort of low teens. We are already in that territory, even with very strong inflation. And I think we will ensure that we not only stay there, but try and move up a few bits as well. So what you've seen in this quarter, we expect to continue in the coming 2 quarters as well.
Sonia and Nigel, in office, all you guys keep talking about these new coffee variants, right? I mean, all these, Slack, and I think that's already old, right? This is new Slave, sorry. But the coffee for me is
off the ball.
The coffee for me is, no, I've not had my cup today, so that's why. The McDonald's coffee. I mean, I love it. I mean, so good morning. So McCafe, right? I mean, I think it's already back to pre-COVID levels. And what are plans? I mean, I think that is also a highly profitable setup for you. And you're rapidly expanding that across stores. Where is that at and what's the progress?
No, we're doing very well with McCafe. As you rightly pointed out, not only have we come back to pre-COVID levels, but we've made a significant shift in our packaging. And therefore, we are grabbing a decent share of the delivery market as well. However, I feel the game of McCafe is yet to play out. I think by now, consumers are slowly beginning to realize that there is good coffee available at McDonald's. So we have 2 objectives with McCafe. Firstly, we want to ensure that we have 100% penetration. What I mean by that is that today we have about 260, 270 McCafes. The plan is to be in every single restaurant. So therefore, the idea is to double the base along with restaurants. So hopefully we'll have 400 to 500 McCafes. That is one part. The second part is average unit volume per McCafe has done extremely well. And I think that's going to double to triple as consumers start recognizing that McDonald's has something called McCafe and it's resonating and the coffee is really good. So I feel the opportunity for McCafe is huge. And that obviously helps us with gross margins as well. So it's going to play out in the coming few years.
Not just good coffee, right? Inexpensive coffee as well, affordable coffee. I mean, if you look at the prices out there, it's bizarre the way people are paying for coffee. So I get that. I mean, it's a great proposition from your end. But, I also noticed, at least personally, I mean, when I look around, I noticed that average order sizes have also gone up quite a bit compared to, say, what they were pre-COVID levels. Personally, I feel that myself every time I go to a restaurant, perhaps because I'm going after such a long time. Are you noticing that too in the numbers? And also on premiumization, are you seeing that play out as well? Not just in metros, but in tier 2, tier 3?
There's no doubt about that, at least from a brand McDonald's point of view. I mean, if you think about it, earlier we were pretty much reliant on value and our happy price menu and aloo tikki. Today, fortunately, our strategy has played off and we have many, many products to talk about. Now, if you think about coffee alone, an average cappuccino at McDonald's is still value for money, but it's 100, 125 rupees. Versus if you think about aloo tikki, again, that's 40 to 50 rupees. Other than that, we have the gourmet range where the burgers start at 200, but very much value for the 200. And similarly, fried chicken, again, is a higher average check product. So yes, premiumization is happening. Now, I mean, I don't call it premiumization. In my view, I call it a bit of indulgence. Consumers now recognize what a burger is and they want variety, they want change, they want indulgence. And from the aloo tikki days, they are looking for a burger that's more filling, that's bigger, that's got unique ingredients like, say, jalapenos. And we are seeing the consumption in that area grow very nicely. So
Okay.
yes, average check is going up for all these reasons.
All right, Mr. Javed, give us a couple of details then. What is your revenue share between metros and non-metros? And also on the total app orders, how much of it is from your own app?
So, I mean, we don't share the breakup of what comes from our app, but the important thing is that we now have 22 million users that are using our app. Our app is growing extremely well. We've recently improved the user interface. We've made it simpler and easier for people to place orders, and all of that is giving us better traction. Also, our digital team, our digital strategy is beginning to take off. It's taken us a little while, but all that is reflecting in better sales through our own app. However, I must say, we look at 3POs as partners, and I think we have an extremely good relationship. It's a win-win approach that we take with them. So we don't mind, as long as consumers sitting at home are consuming our product, we are happy with that wherever they order from.
Okay, and split of the revenues between metros and non-metros?
So we don't share that breakup, but I must say that if I were to take sort of a guess, 60% of our business would still be in metros, and our focus towards non-metros is increasing. I look at it as a positive that we are only in 54 cities, while competition could be in 100, 120 cities. And that shows the opportunity that's available for brand McDonald's. We will continue to grow in the metros, but we think that we have a huge opportunity in the non-metro as well.
No, absolutely. I think the fry, you briefly alluded to fried chicken, right? Is that when did you introduce that sort of product? And I think you've got some targets for contribution per store there. And is that largely focused on the south of India?
Well, at this point, it is focused largely in South India, because South India, it is important to have that product to be a relevant player in the industry. We actually launched it with the start of COVID. So we had a bit of a setback there, but I think from the last year onward, it has really picked up. The total market size, in our opinion, in South India is 4,000 to 5,000 crores. And we feel that we should have a decent percentage of that market. Currently, I had said this in the last quarter, our stores are incrementally doing about 50 lakhs per restaurant per year out of fried chicken. And we think it should double over the next 3 to 4 years. So we see a tremendous amount of volume coming from this particular product category.
So, just going by the numbers, right, it seems like you can achieve your 2-year target as well earlier, perhaps, than what you would have forecasted. I mean, you've done already 1,100 crores in the first half, and you said that in the next 3 to 4 years, you're targeting about 2,500 to 3,000 crores. You want to advance that target a little bit?
I mean, we are soon going to have our investor day where we are going to talk about our strategy for the next 5 years. I'll just step back for a second, and I'm saying, very boldly in 2016, when we were 800 crores, we talked about 2022-23 to be 2,200 to 2,400 crores. And at that time, we didn't have many believers. Our margins were 6 to 8%. Today, they are 13%. And I must say that this year, yes, we look like we might cross those targets in this financial year itself. If you look at the current run rate, almost 600 crores. So if I take 2 quarters, 1,200 crores added to the 1,100 crores, we are in the 2,200 territory for sure. So yes, we should move that target up a bit earlier. We are quite pleased.
And Amit, that investor day that you said is coming up, will you put out sort of slightly longer term targets as well?
Yes,
bigger
always.
plans?
I mean, in 2016, we talked about 2022 and 2023. And we recently did a check that we pretty much have met all our targets there. Now we will talk about 2027.
I thought Prashant's going to ask you whether you're going to put out some burgers there in that investor day, And then you have 3 people right here.
Well, what is the point of coming to a McDonald's conference without burgers?
That's a sector I should have tracked.
But this fried chicken business is quite interesting, right? He's saying that, Amit is saying 4 to 5,000 crores in the south of India. I was there, driving around Kerala, Tamil Nadu. I remember last year, maybe the year before that. And I remember seeing a lot of these KFC stores and then just fried chicken stores with the logo of broadly resembling KFC, but not KFC. And the offering was just fried chicken. And so I think, Amit, that is basically what you're going after, right? That market.
Yeah, absolutely. I mean, McDonald's is not new to fried chicken. Yes, in India, people don't relate the brand and connect it with fried chicken. But if you go to Southeast Asia, we have a very good offering around that. So it's a brick by brick approach is my always, that's how I think about things, that you don't launch everything at the same time. We first needed to get to 150 stores in South India when we went with what I call a silver bullet. So since launch, it's resonated very well with consumers. Our chicken scores have moved up in the consumer's mind, and slowly the connection between chicken and brand McDonald's is increasing the relevance for the brand in South India. So I'm quite bullish about this particular product line.
All right, Amit. Thank you very much for joining us. It's a pleasure and good luck with all of those plans. And we look forward to hearing about those targets for FY27 shortly from you as well. Thank you. Any discussion about food and all
coffee.
show timings and everything goes for a toss,
Especially
right?
coffee, right? I mean, that's a good brew there. But thanks a lot, Amit, for joining in, and all the best. Well, let's do one thing. Let's take a quick break. On the other side of the break, Mitesh Thakkar will be joining in for some technical trades. We'll also get a quick update on what's happening in the world of commodities.
Welcome back. Well, the Nifty is down 120 points odd, so we are at the low point of the day. Let's see whether or not there's a bounce inside. Mitesh Thakkar is back with us. Mitesh, what are your picks at around 10 a.m.?
Yeah. Nigel, I have one buy and one sell call. Oracle Finance is reversing from oversold level, so that's a buy with a stop below 3,000. Look for a target of around 3,100 as the first target, maybe 3,150 can be tested here. While Nestle seems to have given some kind of a negative breakdown on the intraday and the 2-hour charts, so that's a sell. Keep a stop just above levels of 20,350 and look for target of around 19,700, 750 on the downside.
Okay, all right. Mitesh, thanks a lot for that. We are a little short on time, so thanks for joining us and keeping us crisp. Let's go across now to the commodity markets. Manisha Gupta is here to give us a quick run through them. Manisha, over to you.
Thank you so much for that, Sonia. Well, I'm talking about cryptocurrencies today, and it's not very often that we touch this subject on Bazaar, but it does deserve this today because for the last 3 days, we've seen a constant decline come into these markets. The global market capital is now below $1 trillion. Bitcoin is trading at a 2-year lows, and Solana clearly has been the most hit cryptocurrency, down by 45% in last 24 hours itself. The cryptocurrencies have been declining, but all hell broke loose after Binance FTX deal got scrapped. FTX issues are beyond our control or ability to help is the statement that Binance gave out. And it also said that financial documents and illiquid balance sheets is what really led to it. It clearly has been a lot of drama on Twitter in the last 48 hours that we have seen here. It has been about mishandled consumer funds, alleged US agency investigations there. Apart from that, FTX also provided derivative products without approvals from any of the regulatory. It clearly is a time that regulations, compliance, audits perhaps were made compulsory into this area. It's something that we haven't seen at all. This is a report card of what the cryptocurrencies have done on a week-on-week basis. This is most important because the last 3 or 4 sessions have seen a very sharp decline. 25% of a decline is what we've seen in Bitcoin and Ethereum. Cardano is down, Dogecoin down by 42% in last 1 week. And the major declines, as I have been saying, coming in for Solana. And for the year as well, 91% of the value of Solana has been wiped off. This is exactly what the cryptocurrencies have done in this year until now. So it has been about FTT, which is down by nearly 98%. That is the native currency of FTX. And the other has been Solana, which has seen a huge sell-off. The reason being that the FTX sister concern Alameda balance sheet holds Solana in a very big way. Whether it is about unlocked Solana, locked Solana, collateral Solana, there's a huge number that the balance sheet holds there, and is the reason that you have seen a sell-off coming in from other investors as well. Not just this exchange, but the decentralized exchange DYDX also has placed Solana in close-only mode, meaning you can't take new positions. If you are also already holding a position in Solana, then you can wind that off. Crypto.com, which is a centralized exchange, also has halted Solana-based stablecoin deposits. We have seen this come in from other exchanges also. OKX also has delisted Solana. It says that they will stop listing new options when it comes to Solana as well. So this is one cryptocurrency which was doing immensely well in last month or so, but has seen a very sharp decline in last 3 or 4 trading sessions. Well, this is what the Sam Bankman, which actually was seen quite highly of, has said He said it out a couple of days back on Twitter saying that they need $8 billion to continue to operate or would file for bankruptcy. But clearly the help did not come, and we have seen a very sharp sell-off coming in for the FTX and FTT, which is the native token as well. The US Department of Justice is looking into FTX after its apparent collapse, is what we understand in the latest news there. Apart from that, Binance has been the top exchange in the world when it comes to volumes. FTX was seen as a safe crypto company. When you look at Sam Bankman-Friedman, he was seen as the white knight of cryptocurrencies, and the markets now believe that if FTX can go down like that, then the other exchanges clearly are very, very vulnerable there. Markets were consolidating in the month of October, but after what we have seen is clearly disastrous, and the street believes that the next 3 or 6 months can see further decline coming in for cryptocurrencies unless there is a regulation that is brought in.
Absolutely. The world's second largest crypto exchange, right? I mean, going bankrupt overnight, it's really a story that is perplexing and mind-blowing at the same time. Thanks a lot, Manisha, for putting the light on that. It's mostly speculation at the moment, this whole bankruptcy thing, but I think that's the road that they're going down on. But let's get back to the stock markets. Lupin is in focus. Ekta is here to tell us why. Ekta.
Well, definitely a bounce back which is coming for Lupin. So the revenue was largely in line with expectations. It was flat on a year-on-year basis. The street was working with that, with a growth of around 11% on a Q-on-Q basis. Now, what really stood out was the margins as well as the US business this quarter, both which showed a Q-on-Q recovery. So the margins came in at around 11%. The street was anticipating around 10.7%. It is a recovery from the lows of around 6% that they hit in the previous quarter, and hence that is a positive. The other positive is the US business, which recovered to around $159 million versus around $121 million in the previous quarter, and better than expectations of $155 million. So are they out of the woods? The street would want to know what level the management manages to sustain the US business at, and whether or not they get to the peak of around $200 million, which they had hit a couple of quarters back. Now, profit, yes, it missed estimates, but really the profit doesn't matter this quarter, at least, simply because the street is squarely focused on the margin as well as the US business delivering as per their expectations. Now, just a quick word on the India business. That was a bit sluggish, so that was up around 3%. And remember, India has been a bit choppy for Lupin, and it was below estimates. The street was estimating around 8 to 10% growth at least, and they came in at around a 3% year-on-year growth.
Okay, all right. Thanks a lot for that, Ekta. Well, on that note, we'll slip into a short break. But on the other side, our special segment, It's the Economy. Latha will connect with UBS Securities team on their outlook on the Indian markets. UBS is worried about the near-term macros like global slowdown and about the rich Indian valuations. Stay tuned for that. You don't want to miss this.